All right, guys, welcome in. I'm Henish Bullicle with CalHomeCo Construction, joined by Anthony O'Connor with Opta Property Tax Experts. Anthony's a new friend, but a vetted expert in this industry. Anthony, you've been an appraiser for years, and now you've been doing property tax appeal for years as well now, huh?
Right. Yeah. I started as appraiser in 2001 and property tax for almost 7.5 years.
Well, so this is the common question I get when people are calling us to build ADUs is, hey, how is this going to change my property tax? I own $1 million house, but I've owned it for so long. My tax basis is only $200,000. Their concern is their property going to be reassessed? How is the addition of an ADU or an addition to their property going to change their overall taxes? And that's the fundamental question that we'll be answering over the next few minutes in this webinar, right?
It's a good question. It's valid, and people have fears about it, but today we're going to dispel all those fears and make people feel so much better.
Well, excellent. Well, I appreciate you sharing your knowledge. So let's get through this. Let me see if I can put our little floating heads on the page as well, so you can see both of us there hanging out. Cool. This is the presentation you put together. Let's go through it and let's talk about this. So go ahead. Why don't you lead the presentation? I'll just ask questions.
So I think many people don't really understand on how the assessor arrives at their base year value. So typically when a property transfers internally, the assessor or appraisers at the county are required to do an internal evaluation on your property to make sure that it was at market value. And there's a rule 2 thing. Was it listed on the open market? Was there a buyer and seller? Were they not related? And typically, if it meets those 2 criteria, then they'll enroll the purchase price. And then that sets your base year value for life. And then when people go to add ADUs, they're afraid that base year value is going to change. And we're going to explain exactly what that does. It's called a blended assessment.
Correct. Okay. Sorry. So I'm trying to just get the screen so I'm not looking out the corner of my eye here. What am I sharing right now? It should be just the presentation.
That's
okay,
the
great.
Front page. Yeah.
Back to the front page. Just make sure you see what I say. So typically, when you buy a property, it gets reassessed at your purchase price, right? As long as you own it, it's capped at 2% thanks to Prop 13.
Right. So if you bought the property for $500,000, your base year is $500,000. The following year, it's $500,000 plus 2% or $520,000.
Yep.
And then it goes up
510,000. In fact,
510,000. Sorry, my math is off.
That's all good. Okay, so pretty nominal, and that's assuming. Is it always 2% or is it less? It's based on something, isn't it?
It's based on an internal factor. It's never more than 2%, but I've seen some years where they do 1.5%, 1%. During the recession, I noticed that they were only adjusting properties up at 1%, per year. So but in the case of new construction on ADU, since there is no sale, then how does the assessor enroll the assessed value for the ADU or the addition to a house, and how do they determine values? That's what we're going to cover today.
Perfect. And then going back to number 3 on the typical assessment, this is one of the reasons why people should give you a ring, because if you're saying, hey, why does this say my property is worth 2 million when I'm pretty sure it's only worth $1.5 million?
Right. Yeah. The past couple of years have been completely bananas, and inventory is super scarce here in San Diego. And, we may be in a correction the next couple of years. I don't know. I don't have a crystal ball. There's other things that play into it. But by law, if at some point your base year value is higher than market value, like let's say you bought it for 3 million and 2 years from now, it's now worth 2.1. Well, then by law, you can file what's called a property tax appeal and get a refund on the assessed value of 800,000. So you get a nice little chunk of change at around $9,000 refund for your property taxes. So good to keep in touch with me, because we can help you with that and, help you get some cash back in some tough times.
Okay, great. So now moving on, client builds an ADU with us. Typically what happens is they're going to get something from the assessor's office that says, hey, how much was the value of your construction, or how much did your construction cost? Is that right?
Right. So it's a very lengthy questionnaire. It's like 3 or 4 pages. They ask you everything, like how much did you spend on construction, your land, how much were fees, permits, a lot more information that they really need. And although you can fill it out the best that you can, what I found is it's probably best to, have somebody review it like our firm, or just go ahead and give your best estimations. But since construction costs have been so high, what we're finding is that actually doesn't work in the favor of the taxpayer, because they actually use their own internal cost. And so we'll talk about that. But usually, if you get those questionnaires, just fill them out very minimally, be conservative, and then you can contact myself, and we can talk about what's the best way to get that paperwork over to the assessor's office.
Right, because the more I've learned about this myself, this is a little bit more complicated than you would wish it would be, but that's what the government does. And so they've done this. And so fortunately, you're available to help and make sure that you're minimizing your tax liability and exposure. And additionally, the key point is that the primary residence, right, if you're not making any adjustments, additions, or remodels on that, that isn't affected by the improvements that you're making, except for the standard maximum 2% appreciation due to Prop 13. Got it.
Okay, yeah. So if you add on to your home, you still retain the Prop 13 on the land and the existing improvements, and you're only going to be reassessed for any improvements that you've added to the home, whether it's attached to the home or whether it's a separate ADU.
Yep, understood. And so, okay, let's go to this next thing. So the shape classification. This is the first time seeing this. This is cool to see that basically the assessor's office is saying, hey, more corners, more expensive, right? Is that it?
Right. So there are, when you construct a property, there are 3 different quality classes, and they all kind of merge together in a matrix. So there's 5 different construction types. There's metal, glass, concrete, wood.
And that's in the next slide. So this slide just basically says, hey, based on the shape of this thing, we can kind of tell what classification of property it is.
So this would be one of the shape classifications. So yeah, shape A, B, C, and D, based on the amount of points and corners.
So, and for reference, a lot of the ADUs that we're building are basically shape A. Either they're square or rectangular shape.
That would make sense.
It involves staircase on the perimeter to go up to a second floor. It would still qualify as a shape A. It doesn't have all the articulation that these other features have. But now looking at this, it's interesting when you see luxury properties, a lot of them are shaped like C and D.
Exactly.
and they have that
even worse than that.
Right, for sure. Absolutely. Okay, and then on construction types, you were kind of getting towards that.
Oh yeah.
And for the most part, for ADUs or simple residential building, we're class D. We're just making a frame, wood frame. There's not metal, there's not concrete. These aren't like high-tech, high cost office buildings or medical buildings or like that, which would be class A.
Yeah. So most of the homes, the tract homes, the ADUs are class D, which stands for wood frame. An example of a class A construction type would be like the Razor House in La Jolla that's owned by
Alicia Keys,
right? So that's all 100% metal and glass. There's no wood in that house. So it's right by the ocean, but very, very high maintenance cost. But most of the homes are class D here in San Diego. So
perfect. Yep. That's the gist of that. Okay. Now we do an addition to a property, right? Person owns 1,000 square foot house. It's still worth $1 million because it's San Diego, and they want to add 400 square feet.
Right. So this is example taken.
Oh yeah, you got 2,000 square foot house. So say you got a 2,000 square foot house and you add a 400 square foot addition. Sure.
Right. So this example taken directly from the assessor's handbook. It was a 2,000 square foot home. It was a class D, and it was an 8 quality B shape. As you can see, it's D 8.0 B. So that's how we read that. So they decided to add on a 400 square foot to the home. Let's say that was a bedroom. So what the assessor does is says, okay, now you have 2,400 square feet. So 400 plus the 2,000. Then we go to the assessor's table and find out that it's $200.01 per square foot. We take that additional 400 square feet, multiply that by the 201 cent, and that equals an $80,000 added assessment to the property. Really, really, really simple. It's a fair way to doing it, but that's how the assessor treats the addition. It's strictly just what's the addition, what's the cost per square foot of the final product, multiply that by the addition, and there's your assessment. Super, super easy.
Which is great because that way you still protect your lower assessed value for
Mhm.
the original portion of your home. You
Right.
just have to pay the additional amount for the part that you added.
Exactly. Exactly. Now, in certain circumstances, as we were talking before we went live here, Hanish, I've seen some people who said, I'm going to do that 400 square foot addition, but let's just go ahead and take everything down to the studs, take out wiring, concrete, the plumbing, put new floors. Assessor drives by and they can see right through your house, and they're like, well, this is almost a new build. So that changes it a little bit, and they may come back a little bit higher per square foot on the entire home because technically you've kind of changed the roof, you change wiring, plumbing, and so they may come in. So just be careful with that.
So, quick question on that. How often does the assessor come to your property to do these assessments?
Well, sometimes they don't come to the property. You don't know. They'll just drive by and take pictures.
Okay.
Um, in
Does the permit
cases,
department trigger that? If you file for
yes,
permits with the city,
yeah,
the assessor knows.
yeah. As soon as you get a permits pulled, it gets transferred over to the assessor's office, and then they manage the construction. They're kind of the people looking through the bushes, looking at your construction. That's the
Mhm.
way I kind of look at them, is you're just kind of like looky-loos at your property. What we do at my company AOPTA is we actually monitor the construction along the way, and when we're done, we actually literally hand them a report. We have sketches, pictures, costs, and things like that, so that it minimizes the time the assessor has to be out there, and they really appreciate that you do their job for them, and that kind of mitigates them having to come out to the property.
Awesome. Let's keep this going. This is great. So now we're up to ADUs, right? So we build an ADU, and you've got an couple examples here. So
Right.
walk us through this.
Okay. So this is these are taken from the tables from 2022. They just came out. These are internal cost records that the assessor uses. So let's say you build a shape A,
Just a rectangle, four corners.
and it's a quality D 7.5, which is pretty much average.
Okay, so let's
And
talk about
it's,
that for a second because I don't
yeah,
think we've covered that. So it looks like on these tables we've got classes between 5 and 10, right? And they
right,
are all labeled D because it's all wood frame construction. We're
right,
not building Alicia Keys' home right now.
right,
So this is just a basic wood frame home. And the classes are kind of 5 is extremely bargain basement budget construction. 7.5 is more in mid range, and 9 and 10 are ultra high end luxury,
yes,
super insulated, high end windows, high end
exactly.
flooring, high end lighting, things like that.
Mhm, mhm.
Is that right?
Right. So what I find is that 7.5 quality is pretty much an average construction, meets all the codes. It's going to last for years, and so um, that's where we're going to run with this analysis. But let's say the assessor drives by and says, "Oh, the one this looks really nice. So we think this is a 9.0 because it's got this and this, or it's got some trick. It looks really, really nice," and they determine it's a 9.0. Well, you see the difference at a 7.5. Based on this grid, it's $181 per square foot that should be enrolled. So you multiply that by the 1,200, they'll add 217,000 onto the assessment. If the assessor gets a quality class incorrect at a 9.0, that's $330 per square foot, or almost $400,000 in assessment. So that's why it's very, very important that the assessor gets the correct category, the correct classification of the property.
Yeah, absolutely. Because that's a delta of almost 180,000 and an
Right.
average tax rate of 1.25. That could be over $2,000 a year in difference.
Exactly. And that number is for life. And so that's why it's really important to make sure that we hammer down and get these base year values correct to begin with, not having to go back and appeal and go backwards on this one. That's why it's really important to prevent problems.
Yep, absolutely. Makes sense. Very good. Yeah, anything further on this slide?
Nope, that's it.
Okay, next one. So these are some additional questions that I had for you. What about garage conversions? This is a popular one. We got a 430 square foot garage. We're converting it to a 1-bedroom ADU. It costs X amount. How do they assess that?
Yeah, so they will do, much like the price per square foot, they'll do a minor deduction because you've already got the walls there and the roof. So this will be probably garage conversion would probably be the most least expensive increase in property taxes because you're just building around a shell, and you're just building out the interior. So they may come in a lot lower than the $200 per square foot that we mentioned earlier, maybe at 125, per square foot at most. But they will take into consideration that the walls and the roof are already there.
Okay, that looks good. Okay, so
Uh,
what if I inherit a property from my parents and they're saying, hey, you've been a good son, we're going to quit claim this property to you.
okay, so this gets into a little bit of property transfer, kind of out of the realm just a little bit, but from what I understand on property transfers, if your property was, if your parents lived in the property and then they decided to give it to you and it's going to be your permanent residence, then you can still qualify for a parent-child transfer exemption, which means there's no increase in property taxes.
Oh, great.
They just transfer it over, but it has to go from their primary to your primary, and we're good. Now, if you decided that you wanted to rent it out later, then we can get into a little bit of situation with it. It just has to be your primary residence. But if that's the case, then you are free and clear.
Got it. Okay. And so, we've talked about trusts. We haven't talked about trusts yet and the importance of placing a property in trust. Tell me a little bit about that. Does
Yeah,
it give you some benefits?
yeah, it's super important that you put all property in trust because, God forsaken, you're driving home and something happens and you didn't make it home and you just got it into your name and there really isn't, any type of instructions to do with the property, and it goes into probate and it could be very, very expensive, even though you're, if you're a child of that family member, you are going to get the property, but it gets super, super expensive as a court separates that out, and it takes 18 months to 2 years to get that done. And while that happens, you still have to make the mortgage on the property. It just gets really messy. So if you don't have a property in a property trust and there is any type of instructions, if you're not here anymore, contact a trust attorney. They're not very expensive. They'll put it together. They'll do a living trust, but just a super easier, cleaner way to make sure that your assets are protected.
Absolutely. No, see this happen far too often in my business where parents pass away and the kids are like, well, it should be our property. It's not so easy. You still have to go through lawyers. You still have to post it. You have to give notice.
Right.
You might have a distant cousin that thinks they own part of it as well
Yeah.
because your mom told them something once.
Right. And what if you have, three siblings and two of them don't want to keep the house, they want to sell it, you want to keep it. Well, then you're in a situation where you may be forced to sell mom's property, dad's property, because there isn't any written instructions. And so it's just a better way to protect your loved ones with your property.
Absolutely. No, that was great. And I mean, those are important questions to answer, but the gist of this comes down to is that when you build something, you could get someone that's from the assessor's office that misclassifies your property, miscategorizes it, gives it a higher quality rating than you think, and all of a sudden your taxes are significantly higher than they should have been, which could have all been mitigated by contacting you and your firm and saying, hey, help me with this and make sure that I'm having the most reasonable, lowest exposure for property taxes.
Right.
Because I want to benefit from this. Does that sound about right?
Yeah. Our goal is to make sure that you're fairly optimized and you're not being overassessed. And even if there's ways we can get it down lower, we will too, as well legally. But our services prevent a lot of the problems from happening and from being unhappy, because if you didn't do it right, you gave the actual cost to the assessor's office, they enroll those costs, and you spent $400,000, but when you could have gotten $200,000 assessment, you're kind of stuck for that. You can do an appeal, but you're going to be overpaying those taxes for maybe 18 months to 2 years until we can get it all wound back. It just gets more expensive. It's a lot more inexpensive to fix the problem before it even happens.
It's always the case, right? Get it done right the first time. You don't have to go back and fix it, and then takes you double the amount of time and double the amount of work. And obviously double the amount of cost and all the other lost opportunity of paying extra taxes along the way.
Right.
Because once we build these things, in addition to having typically a lower assessed cost than our construction cost, you're also, we can talk about this in another segment, and I'll probably do this with a property tax expert in terms of doing cost segregation, accelerated depreciation, and all the write-offs you can get by building this extra unit. I found that on my rental unit, even though I rent it out, because of all the depreciation I can do, I actually show a loss on that every year.
It's huge.
And I get money, which is huge. And a lot of people that don't own rental properties don't understand the benefit of having the taxes done properly, doing depreciation reports on your income taxes properly, because this is how, property investors can really maximize their return on investment by paying the least amount of taxes on these things,
Right.
offsetting their ordinary income with losses due to depreciation, in addition to making sure your property taxes are
Right.
at the right levels.
And with the advent of people wanting more ADUs, which we talked about, the SB9 where you can split your lot. That's a whole other section to talk about. It unlocks more opportunities for more homeowners to actually become investors while still living on their property. So it's very, very important that the correct tax laws, the depreciation, because now you're kind of leveling up on your investment game, which is amazing. It's amazing to live in California. We have some great opportunities here, but you've got to make sure that you do it right.
Awesome. Hey, Anthony, appreciate you spending some time with us and educating everyone that's watching this. This is a
My
huge
pleasure.
topic that always comes up every time we're building an ADU for someone. Sometimes it's an afterthought. Sometimes people think of it ahead of time. It's like, hey, wait a second, what about my property taxes? So
Right.
This is what this webinar was for. Thank you for joining me on this. I think it'll be a great resource.
My pleasure. Thanks for inviting me. Appreciate it, Hanish. Always.